The dip keeps on dipping. AMD was down over 4%, NVIDIA nearly 4%, Nebius down 7%, CoreWeave nearly 9%, Astera Labs over 8%, and Credo Technologies about 12%. Now, today's episode, I just want to share my overall thoughts, what's happening in the market, what I'm doing, and I would love to hear from you, the viewers. What are you doing with your portfolio in the comments below? Everybody loves to share ideas, and this is community. So make sure to share with everybody else. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so I have a few slides here, but first, let's just start off with some laughter, right? I think laughter is a great way to remove some of the pain. This is on my X. Make sure to follow me. I posted this earlier today. I was like, this is how some of us are looking at our stock portfolios this week. Now, let me just say, if you are familiar with this channel, you know that I am heavy into AI and semiconductor stocks. The great thing is, though, I would say I know the companies that I own very well. And the only thing that has really changed for the companies that I own, like AMD, like NVIDIA, Nebius, CoreWeave, is stock price, right? And the sentiment over that stock. But the overall fundamentals on the top end, or the overall thesis for me for the AI market, hasn't really changed. I mean, just a quick feedback of these past few weeks. All big tech players have said they were going to increase capital expenditure because they continue to see a massive growth in AI, and the demand for cloud solutions continues to be strong. We recently saw AMD talk about a 1 trillion total addressable market in AI accelerators. We recently saw NVIDIA talk about their Blackwell and Rubin platform having nearly $500 billion in foreseeable revenue. We saw, what else did we see? We saw Anthropic announce massive investments in data center. We saw Microsoft announce a massive data center as well. So the overall thesis is still there. We saw Nebius and CoreWeave mention that they continue to see strong demand for AI compute. Not only that, they also mentioned that older GPUs, the H100s, are still selling out and they're still seeing demand from them. So right now, the overall thesis has not changed. The only thing that has changed is the stock price. And I'm not lying, and I would be lying to you to say that when I look at my portfolio, it doesn't suck a lot. It doesn't suck, right? It sucks, right? It sucks seeing a portfolio down those many figures in just a few days. But overall, if you look at the long term of things, and it sucks, right? Year to date, Nebius up roughly 95%, Nebius up 187%. The first one was CoreWeave. NVIDIA up roughly 34%. AMD killing it. This is the one that's been carrying the portfolio pretty much this past week, up 105% within the past 5 days, still up over 7%, even during these nasty sell offs. So, long-term portfolio still green. We are seeing kind of a pullback, and I am taking opportunity into this portfolio, right? So the dip can keep on dipping, and just some other tweets here. The market today, I've fallen and I can't get up. Hopefully it gets back up. This is another one, right? The Future Investor posted this, and he posted on more Nebius, but it's could be seen as a broader thing. People bet for a dip, right? In October of 2025, Nebius was at 135, and everybody was saying, look, I can't believe I missed it at $86. Then when it drops down to those levels that you wanted to buy before, it's like, hey, I'm not buying that, right? It's just a month later, it's like we got the stock price down. It's like I'm not buying it. It's a failure. So sentiment is completely correlated with stock prices, right? Obviously, you're going to see a lot of bears, and even in these comments, you're most likely going to see Jose, you're coping, the AI bubble is over. But like I mentioned at the intro of this episode, what has changed? What? I mean, tell me, did someone say they're going to reduce their capex? Did we see that AI labs are no longer innovating? Did we see robots already going all over the world? Is robotics actually a thing and we don't need AI anymore? AI robotics and humanoid robotics and autonomous driving, right? Is that really a thing right now already? Is AI already helping solve a lot of medicine solutions and discovering all types of products that can help the future of humanity? No, that's not happening right now. and the demand for compute is still going to continue to grow. And we are seeing actual returns on these investments from companies like Meta and Google with the advertisement side. We're seeing it with the tokenization sales with companies like Amazon and Google and Microsoft with the cloud base, right? So nothing has changed. And I know I sound like a broken record, and it sucks to see these portfolios down, but I believe the long-term thesis is still intact. Now, I don't own Credo or Astera Labs, but these are two that are very popular in this space. Obviously, valuation is also a concern. Some of these stocks have seen crazy valuations. I know Credo and Astera Labs fall within those, where if you're looking at forward PE ratios, you're still looking at crazy, crazy valuations. But it also could be an opportunity if one is curious in the market. Now, for the AI thesis, this is something that if you've been following this channel, even though I am bullish in the long term of things, I have said that it's going to be a volatile trip, right? We're going to continue to see these bearish headlines. We had the DeepSeek headlines. We had Microsoft slowing down AI data centers. We had the slowdown in CapEx. We had the slowdown, or what is the potential ROI coming in from AI companies. Every quarter, every other month, we have a new headline that creates fear for AI investors. And that's why I think it's crucial to understand the technology and to understand the potential from here on out. So I am buying during this dip, but I also am going to mention that I have some other slides. I also mentioned that the dips can be days, can be weeks or months, and only time will tell. And what I'm pretty much saying there is, well, I am buying, I'm not unloading all the cash that I have at once. I'm never unloading all the cash in one day, and not in a short amount of time either, right? If you do have cash at hands, and either being, if you have cash, I might have positions that I think are very low beta, like maybe ETFs that I would like to rotate during this cycle and put them more into high growth stocks. I do that, but not all at once, right? I'm very, very slow with adapting. So maybe this day I sold a small position of my index ETFs and put it into high growth stocks. I might do that again next week and the week after that if the dip continues. I'm never going to unload all at once. And that was has helped me build the portfolio that I have right now. And for everybody, it might be different. Now, outside of some of these AI fears, you're also hearing discussions like this where we see economic advisors saying that the shutdown caused massive billions of dollars in the almost 2 months of the shutdown, and that GDP is going to take a hit because of that. Now, stuff like this can also kind of hit the news and kind of create more negative sentiments towards the stock price. Again, the companies that I own and the ones that I'm excited for the future of AI are not going to be dependent on one quarter. They're going to be dependent on this overall ecosystem that is being built by the AI evolution. Now, with CoreWeave is seeing a little bit more pain. And one thing that I keep seeing, so I want to kind of just bring it up, is we're seeing posts about credit default market and the credit default swaps here. And if you look at the numbers, I forget who posted this. I think it's Gordon here. I'm not too familiar with a lot of the analysts, but the information here is something that has been shown a lot. And the CDS for CoreWeave is right now at 562 basis points. I'm going to say I'm not an economist. I'm 100% not. So I wanted to understand a little bit more about this. So obviously, I did what any person would do. I go to AI and kind of understand. And CDS, obviously, these swaps are meant to kind of be like a protection. And 562, actually, if we pull up here I use Perplexity for this one to research more. Core CDS spread of over 500 basis points is abnormal and represents a clear warning signal of stress in AI infrastructure financing. And it recently widened from below 350 basis points to now over 500 basis points in a few weeks, indicates that the market is repricing credit risk to reflect fundamental concerns, maybe unsustained leverage ratios, execution risk in data center delivery, timing mismatches between contract revenue and debt services, broader question about AI demand sustainability. So it's pretty much a form of protection for a lot of these companies. And right now, based on the number, within the next 5 years, the market expects CoreWeave to go under. I think it's about 30 something percent based on these numbers and valuations. Now, the main reason is this, right? I mean, if you look at it, the company is paying about $300 million per quarter on interest expenses. So about $1 billion on interest. It has about $10 billion in debt. It has of long-term debt, and then it has about $4 billion in short-term debt, and only has about $1.9 billion in cash. If you've been following my channel, you know this about CoreWeave. You know this is a huge debt leverage company. Now, the reason I'm not too fussed about this just yet is because I do believe the AI demand is going to continue. And as they continue to build more data centers over time, revenue is going to explode like no tomorrow. Cash flow is going to come in, and you're going to be able to expand as pay all this down over time. And you're going to be able to expand even more and more over time. And then that continues to go. The demand for AI compute is going to continue from what I see right now. Now, the market is obviously not pricing that. They are worried about it. And I would say most of the market just sees the financials behind it. And I do believe the financials are crucial, but I don't think the market, from what I see, it sees the long-term potential as well. Now, there have been times, I think in 2018, Tesla had CDS of over 500 basis points. That's when it was ramping up its overall Model 3, I believe. One model, I forget what model it was. But it is during times where things look sketchy. And right now, obviously, with stock prices dropping like crazy, the overall fear and sentiment towards the AI market is also pretty fearful. So when it is very fearful, then you even have certain type of investors wanting to make sure that their debt is safe, right? So you also see a growth in this. And this is why we see credit swaps of other companies like Oracle, like SoftBank, like AMD, go on Taiwan Semiconductor. These were all up a nice amount today based on this image. Again, when you look at the basis points, the only one that's over 500 out of this is CoreWeave. It was a limited amount of companies, but it does showcase that CoreWeave is the one that the market is more fearful about. Now that gets me excited, because if the market is the most fearful about this, if they do succeed, then this is the opportunity for this to be a multi-backer player. And I think that's where it's going to go. And that's why I continue to buy the dip. Now, the other thing I want to showcase is now we understand some of the risk and what's happening in the overall market, what's happening here with Corey. Like I mentioned, I am buying this dip, but I also am cautious with how I buy it. I don't blow all my money at once. Now, some of the things that I'm seeing that are extremely bullish for the overall market, Google DeepMind recently just announced Sigma 2, which is an AI agent that is great for virtual world. It helps you kind of play. It plays games for you. Now you might say, Jose, why is this so cool? Why is playing games so cool to you? Well, it's a form of AI agent. Why can't you make it do something else, right? This is just a top level place, but then the technology that can be used here can be used to maybe, instead of playing a game, maybe doing something in an app, maybe creating something with Unity, maybe creating something with Photoshop, maybe creating something with some other form of application, and having this full AI control within it. So I think this is pretty insane. And again, we're only in early innings here. When this becomes an actual consumer product and it hits consumer apps, the demand for something like this is crazy. What else do I have here? So Sima here, you kind of give it the prompts and it does something. The other thing that I saw was pretty interesting was Anthropic today announced that they disrupted a highly sophisticated AI-led campaign of cyber attacks. Now, they are confident that the threat actor was a Chinese state-sponsored group, and it was attacking a large amount of tech companies, finance institutions, chemical manufacturing companies, and government agencies. Now, this is a little far-fetched, right? But this is with limited AI compute. I personally believe in the future, one other tailwind for AI, and it's not something that's going to be a massive tailwind right now, but in the future, why can't AI reserves be a form of reserve that is needed for national security? Because what happens when bad actors have more computing power to throw even more AI agents to do these cyber attacks? The defender needs to have even more compute to make sure that they don't get attacked by infinite amount of bots. You need to have the defense. So even Anthropic acknowledges the paradox that these same AI capabilities that enable attackers are crucial for cyber defense. And this creates a ratchet effect. Actors scale up their compute for more AI agents. Defenders in response must scale up. Since defenders scale up and have better defense techniques, then attackers adapt, build better attack solutions, techniques, and scale up even more compute, and the cycle repeats. Now, obviously, national securities become compute dependent. A government can't afford to have adversaries with superior AI cyber capabilities. So, obviously, you kind of see these laws that prevent certain NVIDIA chips. This is one of the reasons, right? And eventually, adversaries are going to be able to build their own AI chips, and then national securities are going to just need to buy more AI GPUs. Corporate companies, right? They're going to have some form of AI defense, either being their own or licensing something from maybe companies like CrowdStrike. But overall, it's no longer just you need to have. It's not just I'm investing in AI, but it's a need to have, especially if you want to protect yourself in various industries, right? So I think this is an interesting thing, and it's interesting to see how this is kind of transforming into the cybersecurity world. So it's another tailwind outside of the robotics, just the need of defense, national security, government securities, company securities. It's a crucial tailwind, right? So you have a lot of tailwinds for the potential of AI compute. Now, the final thing I want to mention is we are getting a lot of 13F reports coming out. We're going to get, I think, NVIDIA somewhere soon within the next few weeks for their 13F. I am curious to see what they recently have, if they bought anything, if they sold anything. Remember, this is going to be for the last quarter, but still would be cool to see if they have made any changes. Now, if you got anything from this episode, market's always volatile. I never blow all my money at once. I understand the risk with the stocks that I own, and I understand the companies that I own, and I'm prepared for volatile times like this. So that helps me sleep at night. I tend to buy opportunistic time. I think right now it is an opportunistic time. And I will be again in vacation. I know the past few days I was already in vacation. I traveled to Florida with the family this weekend. Tonight we're actually traveling again. So over the weekend, I will be doing videos, but I will be doing them a little bit later than usual. So again, thank you for the support. We're almost at 81,000 subscribers. Can we get that by the end of this video? So if you haven't subscribed, please make sure to hit the thumbs up and the subscribe button, and catch you all later.